What's good, everybody? Welcome, welcome. Happy Monday. It is Monday. We got our lights out situation taken care of. We're back up and running. Everything should look smooth. It should sound good. Everything should be dialed back in. So we're here to talk about the markets today. If you're watching us for the first time, we are wealth managers, a financial advisor offering an investment service. You just go to jazzwealth.com, check it out. We'll help you with your IRAs, your Roth IRAs, rollover accounts, transfer accounts, whatever we can help with. A couple things for our clients on the side there. You should see tomorrow we're doing our student loan class to talk about how much should you take out in student loans, if anything. How do you calculate that number? If you haven't switched over to Nasdaq 2.0, you're going to have a little bit longer than previously planned. It should be done by the end of the month if you're trying to make the transfer, but if not, maybe we'll give you a little extra time. And I'll be out of town, of course, on this Friday, traveling to North Carolina for another drum corps show. So we'll see how that goes, but no closing beat, by the way. So just Monday through Thursday this week. Let's get started. So we'll go over to, actually you got all the performance and everything you can see on the charts. We'll go over here to talk about what's good today. So the Dow, we got lower by 13 points, just basically a flat day. And this whole breathing in, breathing out sort of pattern that we've been talking about, that continues. Nothing too exciting to report there. Earnings are going to be the big focus this week. A lot of down names. Visa, one of them that's going to grab some attention. What else did I put down? Boeing is another one. AT&T, McDonald's, all going to be reporting this week. Earnings galore. So if you're interested in following earnings, that's going to be the driving focus. If we look at the S&P 500, there we go. That was actually up a couple points today. And the reason for it, the banks. We always say, just time in and time out again, the banks and the tech stocks. The banks and the tech stocks. Well, if we look at the top performers in the S&P 500, some of the ones near the top, you got Wells Fargo, right? You should see that on the chart there, breaking out over the 200-day moving average. We've been talking about that. Regions Financial, Ameriprise, Fifth Third Bank, SunStreet, all of these up over 2%, by the way. SunTrust Bank up about over 2% today. Capital One also up 2%. Bank of America up 2%, right? You're getting the point there that the banks continue to help drive the overall market. So when we look at the S&P 500, we need bank stocks and we need tech stocks. So if we go over to the S&P 500, notice today's performance. By the way, if you are one of our customers and you haven't got the candlestick class yet, we're getting ready to do candlesticks 2.0. So we're going to even take it a step further with our classes. So if you haven't got the first one or had a chance to watch it, be sure to check your email for that. But anyways, we got the S&P moving higher. Yes, we had the bank stocks today, but we didn't have the tech stocks until late in the day. They started down on the day and slowly started to recover. So actually the way you can see that, if you look at the tech stocks here, you've got, you know the candlesticks now, right? Our customers know exactly what today is. It's a day where we started off red. It was pushing lower, 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 lower. All of a sudden the buyers started coming in, pushing back, right? All the way back to where it started and then some. So a good day for the tech stocks. However, because they took long throughout the day to catch up, you just got a small little bounce in the tech space. Now, in the tech space, let's keep up with that. Google or Alphabet. So you got them reporting earnings after the close. That stock's going to open at new highs tomorrow. I believe the stock was up 5% after just reporting earnings, beat way beyond expectations from Wall Street. Yeah, up over 5%. Really good earnings report to kind of kick off the week. Remember, Wall Street's looking for 20% earnings growth. So they think that year over year we should show 20% earnings growth. We now have 18% of the companies in the S&P 500 reported earnings so far, and 82% of them have beat expectations. So doing really, really, really well. And overall, we've got earnings growth coming in at the moment at 20.6%, which is better than Wall Street's expectations. We will, of course, keep you posted on that. So we talked about the banks. We talked about the tech stocks. What about the weak ones today? Well, the weakest sector was consumer staples. We've talked about this in our daily update, that slow grind, right? Going back here to April, early May, that slow grind, we call it sector rotation, where money just sneaks in, right? They're trying not to gain any attention. They just want to keep buying this sector little by little. Well, now we're here at the 200-day moving average. And since we've been close, look at here at the last week and a half, since we've been close, back and forth and back and forth. They call that Christmas tree trading because one day's red, the next day's green, the next day's red, the next day's green. It's a bit frustrating if you're a long-term or a short-term trader trying to decide what's going on there. But the bottom line is you can see consumer staples, they're taking a break. All that buying that has kind of happened over the last month and a half, slowing down there just a little bit. So no problem. We'll keep an eye on it, of course, but we'll keep you posted. But for now, no problem. Totally normal. I would expect that to happen. Into some individual stock names. Your best performer of the day, Hasbro, 13% higher on the day. They beat earnings by really, I mean, a mile. If there's a way to define how much they beat earnings, they beat by a mile. They make toys, right? So we know who Hasbro is. They make toys, and there was a lot of concern that because Toys R Us went bankrupt, Hasbro's sales were going to suffer a little bit. Well, they came in much better than expected, and that really sort of puts the idea of the Toys R Us problem, kind of puts it all off to the side, right? Everybody's like, okay, they can grow without Toys R Us. Of course they can. And Mattel was a little bit higher on the news. No news here for Mattel. That's your lagger. Those guys are not doing as well, keeping up with the rest of the toy world as far as digital toys go. So that stock was only up 4%, all because of the news that came out of Hasbro. Let's keep going. Papa John's down 10%, broke to new lows today. If you see it on the charts here, there's nothing good about that. You don't have to know candlesticks or know charting or know how all this stuff works to know that this thing's moving in the wrong direction. So it broke to new lows today, down to $46. The company is further trying to keep Mr. Papa John, the original John Schnatter, or Schlatter, I forget his last name. They're further trying to keep him away. They've enacted a clause that's in their bylaws that says no matter how many shares Mr. Original Papa John's decides to buy, he cannot have majority stake of the company. There's nothing he can do to regain control. And so the company continues to push him out. Is it a good thing or a bad thing, right? What he said and how it all went down. Do you agree, disagree? Doesn't matter. What happens is investors do not like uncertainty. They like to know what's happening with the company, what are the good things that are going to happen, what sponsorships are available, how many pizzas they're selling, and when all this attention gets focused on what somebody may or may not have said in a bad context, then all of a sudden investors are like, I can't deal with this, right? I can't deal with the drama, I'm going to move on. If Washington were a publicly traded company, it would look like this, right? Nobody likes drama, we don't like trade wars, we don't like that nonsense, and so what happens? People just walk away. For now, I would expect the stock to just continue doing what it's doing until there's a resolution and they sort of drift away from the media. So we'll see what happens there. Tesla was a little bit lower today. Odd headlines. If you follow the drama with Tesla, sort of odd headlines. Apparently the company was asking some of their suppliers for refunds or discounts, reimbursements I should say. And that was construed as, oh my God, Tesla's out of money, and they're asking for their suppliers to give them a refund or reimburse them for some of their costs. And so Tesla came out and said, no, man, that's just a part of doing business. We're asking for them to reimburse us on costs that we shouldn't have been charged. So I don't know. I think it's one of those things where everybody knows Tesla needs to raise lots of money. We're talking double-digit billions of dollars to continue, and that has to happen in the next 2 years. So everybody's trying to be first on the news story to be the first to break the story, really, that Tesla is trying to raise money, and this is not the story, right? So this is just one of those media headline blips. Caused the stock to trade a little lower by 3% today, but not a big deal at all. So I have no worries there. I think there will be some worries, but we'll see what happens. What else? That's pretty much it. You had gold down 0.5%. Interest rates spiked today, right? Real sharp spike in interest rates. Check up here on the ticker there if you want to see exactly what happened. Big day, right? If you follow that stuff, back towards that inverted yield curve talk, it's a bunch of nonsense. And crude oil down just over 0.5% on the day. That'll be a focus one this week as well. I have a lot of energy names reporting, I believe, towards the end of the week. So we'll check that out. What do we got for questions? Kevin, I'm in for the long haul. Market's still showing good returns, 13% the last 12 months, good growth, mutual funds. There you go, right? If you know the stats on when the markets fall, how long do they fall for, and what's sort of the worst you can expect, then you're really not scared when things do start to fall. But good for you. Very nice. Manny's glad the power's back. Me too, brother. It's hot here. Not as hot as Texas, I'll give him that, but we got our power back pretty quick. So the storms have passed, it seems. We're back to work. JK, Google is one of the easiest companies to hold long and make money. They smashed it. They did. They really did well on earnings there. Cost per click, everybody likes to look at that. Cost paid per click, everybody likes to look at that. other bets. Their other bets came in a lot better as well. So talk about a company that's just doing the right thing and repeating that process over and over again. Can't say the same for names like Tesla or Mattel, although you wouldn't compare those. So nothing there. Hey, earnings this week. Everybody, just imagine that everybody's reporting earnings this week. This is one of the busiest weeks in the earnings season. Facebook, Amazon, I've got down as some of the big ones coming out. AT&T, Verizon, Boeing, Visa, McDonald's, some of the bigger Dow names that are going to be reporting there. We'll keep you posted, of course. We may even do a separate, different little slide here off to the side to change it up a little bit. That's about it. We'll wrap it up there. I will thank my blessings there that we had power through the whole thing. If you have any questions or anything, feel free to let me know. Happy to help you. If you haven't checked us out with Jazz Wealth yet, go to the website, check it out, look at our portfolios, see how they're doing. And if there's anything I've helped you in any way, hit the subscribe button. Really appreciate it. And we'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.